Okay, so this video is about our owner finance home program, and our goal here is to answer all your questions and to give you an overview of how this works. So this is what we call the info of how the program works. Okay. So who are we? We are a real estate investing company based here in Atlanta. We buy, we sell, we rent, we offer owner financing. Our service areas are Cobb, Henry, Douglas, DeKalb, Gwinnett, Fulton, Clayton, and that's our website, rgicompanies.com. Okay. And so, what is owner financing? So, owner financing is when we become the bank for you as the buyer by self financing for the purchase price of the property, less the down payment, which is typically around 20%. And we'll explain that further in the next coming slides. So, when it comes to different things, the it's also known as land contract, seller financing, seller carryback, creative financing, in-house financing. So these are all terms of how that works. Okay. Now here are the requirements. The requirements are very simple. What we look for is proof of income. So typically, if you, let's just say the rent, no, I'm pausing. Let's just say the payment is $1,000, and the looking ahead, how do I qualify? Well, you have to show a gross income, so not net, not what you exactly get in your bank account, but you have to show a gross income of $4,000. If it's $1,000, is what the monthly note is. Okay. Now, another thing here too is what we require is proof of a credit repair plan. So we don't care how this gets done, but we need proof because we want you to be empowered to have options, and so we don't want to put you in an owner financing situation, and it's not beneficial for both of us. So our goal is to enable people to become homeowners, but we want you to be responsible, and we want you to be able to, grow throughout this relationship. So what we're looking at is we need you to be serious about owning a home. So the ideal person for this would be somebody that inquires, they have the down payment, they'll fill out the questionnaire on the website that we'll discuss with you in a few slides, and they take action on this. You don't have to have a perfect scenario. One of the main things about us is we specialize in solving real estate problems. So if you come to us and you're serious about this, you have the down payment and you require some assistance in getting everything together, we'll assist you with that. Main thing is be serious. Bankruptcy and foreclosure, we're okay with that. We don't immediately deny you because of these things. So what we do is we do common sense underwriting. So we do a case by case approval, and we could tell you, here's how we might be able to approve you, or we'll tell you the reason that we might not be able to. But most of the time, you qualify despite a bankruptcy or foreclosure. The main thing is this can't be pending or an open case. Okay. Now, what we typically look for as far as a down payment, we look for proof of about 10 to 20% down. And this depends on what price point of home that you're buying and the demand of the home. So if there's a home in a high demand area, yes, the down payment may be more. And as far as the differences are that when it comes to a possible refinance, the actual requirements for a super jumbo loan, which is a higher price point, or a jumbo, or if it's 100,000, they're very different. So we're very particular about just making sure that we put you in a position to where you're able to help you some. Couple of things here. So contract job, self-employed, that's okay. Just like bankruptcy and foreclosures, we review these, do common sense underwriting, and we approve them on a case-by-case basis by reviewing what you have. Our main thing is that we don't want to put you in a bad scenario. So if you are self-employed or you earn money through a contract, and the home that you choose requires a 24-month refinance, we don't want to put you in a scenario where you're unable to refinance at that time. Okay. So we're going to qualify you up front to make sure that you're in a good situation. Okay. Now, here are the benefits of owner financing. You have income tax benefits, there's lower closing costs, fast closing process, you get full control of the home, you have flexibility in qualifying, you have a potential equity growth, and you have increased income potential. So these are things that I would say are the benefits of owner financing. There's different reasons why someone might want to do that, and we will help you to actually, go over all these different benefits and how it works. A couple of things here. Now, here are some important facts. Typically, when we do owner financing, I could tell you that it's not for everyone. Just because you have a lot of money, cash, or savings that you want to put down, it's not for everyone. You have to be very aware of what you getting involved with, and also what it is not. So with our owner financing program, we typically require the borrower to refinance in a 24-month period. So what we offer is no bank qualifying, where you don't have to go through all the guidelines that a bank will require. Now it will have higher interest rates. So typically there's an incentive of where you are able to own that home today. You will pay a higher interest. How much is the interest rate? It just depends. But typically, what you're looking at is it will be higher than the interest rates that you will get today. As far as the takeaways from this is that it's short term. That's why it's important that you have proof of a credit repair plan, so you can actually refinance into it a permanent financing. But for those who understand that income is not just simply about what you bring in on paper, it's about the tax benefits that you get. So you may not know if this is right for you, but if you earn a lot of income and you're currently not able to take advantage of the tax benefits, then this is for you, because you're able to write off the interest. And we'll go through this here in a second, but for the most part, you also have the option of interest only loans. Now, why is this important? You're thinking, why would I take an interest only loan? Well, one, if you're able to write off a higher amount of interest, then you should talk to your tax accountant on this. We're not tax professionals, but talk to your tax accountant. And if you're able to write off more interest, then you can adjust your actual income that's net to you. So it actually increases your earnings, allows you to write off more. Principal and interest loans, those are different features. So you either have a principal and interest loan, it's like typical like a PMI situation, everything's escrowed, or you have an interest only loan. Can be amortized up to 30 years. So we amortize up to 30 years, and depending on what the scenario is, sometimes we allow individuals to actually finance that home for the full 30 years. So one could start this program and get to a point where, because they understand that they're getting all the benefits, they might be paying a higher slight interest rate, but you're getting all the tax benefits, and they stay in the situation for 30 years. And we'll let you know up front if that's possible on that particular property that you're looking at. So you might not have noticed this, but this is not right for everybody, but it's for those who understand it. You have to be diligent in making sure you understand this before you move forward, okay? So income tax benefit. The main tax benefit of owning a home is the homeowners may deduct mortgage and interest and property tax payments, as well as certain other expenses from their federal tax income. So again, we're not tax professionals, so consult the tax professional to discuss these benefits. Now, another thing to here is lower closing cost. If you purchased another home before, you know that it's a constant jumping through hurdles. So what happens when you purchase a home through us and you move forward is it allows you to avoid the expensive and lengthy financing process of going through a bank. Owner financing saves both parties from having to pay certain closing costs. That's typically adding 2 to 3% to the loan amount. So in short, you might be thinking, oh, well, the down payment's high. Well, keep in mind that when you go buy a home, they're going to require that whatever they have amount down, and then they also require closing costs. So let's keep that in mind. Fast closing process. When parties choose to close by owner financing, they eliminate certain closing services that lenders usually require, such as home inspections, reports, appraisal reports, title reports, and property surveys. These are all things that you're free to do. Okay, so if you're wondering if am I required not to do these things? No, you're free to do these things. You can get your own home inspection reports, appraisal reports, title reports, property surveys. So you're free to do that. All right, control of the home. So you can have full control of the benefits of, and home. You can have full control and the benefits of homeownership to make interior changes, home improvements, and design upgrades to your new home. So we are not your landlord. We're not going to police you. We're not here to fix toilets. You own that home. So people can, buy a home right now and have full control. We're not coming to visit you, and you own that home. Okay. Now, flexible qualifying. The seller sets the terms of the transaction, which means there could be more flexibility with credit, employment qualifying versus bank qualifying. So we do common sense underwriting. So can you imagine you're able to prove your ability to purchase the home by providing us, your previous rental history, a full application, proof of the down payment, and meeting the minimum requirements, and you're able to own that home right away. So that's how quick and easy that process is. Potential equity growth. By owning your own home, you reap all the benefits of appreciation. So as property values increase, as the market increases in value, you gain equity. Now, here's another thing too that you might not be aware of. This increases your income potential. By owning your own home, there are specific tax codes and deductions that you may legally claim through the IRS, allowing you to increase your net take-home pay on your W-2 paycheck every month. All right, so you need to consult with your tax professional for details on this, but this is a well-known fact. This is one of the main reasons why people own a home. So if you are seeking to make the most of whatever you're earning right now, for one, by the time you refinance out of this owner finance, you're going to be paying less than what rent is, and you're going to be taking home more pay. So that's twofold. So you're paying less than what you would usually rent for, and you get the additional tax benefits, increasing your take-home pay. Now, how do we get started here? So it's very simple. Couple of things here just to recap. You have proof of the down payment. You're serious about owning a home. This is not something that you're just not sure about. You've done your homework. You want to own a home. You know the area, and you also are ready to move forward. So go to ownerfinancepath.com to complete or buy a questionnaire. We're going to have a tab there that will say, here's what property you're looking for. And as we get inventory, we'll also have a tab to select what properties that might be of interest to you. Okay. So if you have any questions, feel free to go to the Facebook page, the actual Atlanta Rent-to-Own Facebook page, and the group. The Facebook page, you can use that to ask questions. And, once you're able to move forward here, a person might be able to buy a home tomorrow, next week, and we'll get you started on, building up your credit. We'll work with you. If you need help with that, it doesn't matter. Just have a plan. And, you'd be in a better position, more income, tax benefits, reaping all of those. All right. Well, hey, thanks for tuning in, and Have a great day.